I think for me, the markets I'm still watching the closest are going to be this gold. I'm very serious about getting long gold again. I would like to try it out, and I actually don't hate this at all. Waiting for the breakout, but again, I've got to see. The thing for me is I've got to see price break just to see that this move seems real. Nas pulling back. Yeah, let's pull that up. NASDAQ. Look at that. NASDAQ erasing all of that opening steam, coming right back in. Gapped on the open here, S&P. Pushed up in the pre-market session. But still, again, thought process for S&P is staying long unless we break structure. I've been in this trade for a long time now, much longer than my average position. I've talked about it endlessly. You guys know the drill. I'm still in from my November 1st purchase. And just to reiterate, if you haven't heard me talk about seasonality before, here's the in on seasonality. It is such a powerful indicator. It's not the holy grail because it's not perfect. Seasonality does not predict the future perfectly. But as we entered into these last 2 months, I have pointed out again and again. Again, recently I tried to go long gold. It didn't work out. I was break even on my 2 trades in the pound USD, so didn't really work out. But I've been really right about the S&P. And I point out the wins and the losses because I think it's important. It frustrates me to no end when people will never talk about their losses. They'll only talk about when they're right. But I do think it's also constructive to talk about wins from a perspective of how did they come about, because it doesn't help anyone if all I do is show you the trades after they've worked out, right? That's like social media 101 is only ever talk about a trade when it's going really well. I don't really buy into that. I don't like that approach. So let's talk constructively about the S&P trade. Let's get real about the S&P move that's gone on. I've been bearish dollar. I've been bullish S&P and gold. Gold has not played out very well for me. I haven't been able to capture that bullishness that I've had on gold, but I have been able to capture it on the S&P. So in November, we looked historically at what the S&P typically does. And in November, it is typically one of the best months of the year in the last 10 years. So typically the NASDAQ, the S&P, the Dow, they typically rally at the end of the year. Is that every year? Is that a certainty? No and no. But it's a probability, and that's all that trading you can possibly do. There's no guarantees or telling exactly what the market's going to do. Anybody who speaks in certainties in this game is a fool, and there's no other way of saying it. If you hear somebody speaking in certainties about markets, they are a fool. If it even sounds close to sounding like they're speaking in certainties, they're losing their money and they're not telling you. Markets are hard to predict. And the point that I'm trying to get at is that we had a good setup, a good bias going into the end of the year, but we didn't know it was going to do this well. I just had an educated guess. That educated guess paid out big time because I'm still in and I've captured this whole move during the end of the year. S&P up 3.8% in November. Actually more than that. I don't know why that seems off. It might be missing some data in it. Point is, S&P up really, really strong in November, up really, really strong in December so far. So we've stayed in on that trade and stayed true to the analysis that we did early November. Now, let me also clarify, I was also trying to catch buys over here and took some pretty good sized losses along the way. So there's your full transparent breakdown on the S&P trade. Now, on top of that, I also liked the breakout. So we'll go back to this time and I'll show you guys what was going through my head when I took this trade initially. We had this downward trend and I had paused on buying. So I think I can't remember exactly. I think I tried to buy over here. I think I tried to buy here. Both of them ended up being losses. And I was actually trading the NASDAQ at the time. So it's the same general structure, but I bought, and both of them were losers for me. Then I said, you know what, we've got this downtrend forming at the time. So after that, I was like, okay, downtrend seems to be forming. Let's wait for the breakout. And we did get the breakout. So finally, let's step forward here. I'll show you what was going on. Forward. Okay. So price breaks that. Okay. So it breaks out of this and it pulls back and I get long. So we broke out, we closed above, and I said, if it pulls back, we've got this nice break, right? Down, 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 boom, break to the upside. Finally, some bulls showed some strength and it pulled back intraday and I jumped in there and I bought. Now, I had no idea how well this trade was going to play out. But the second I bought, it was like within the first 15 minutes, it was up and it never came back. We're still in the trade to this day. So price just kept going and going and going. And so at this point, you sit there and you say, well, what do you do with a trade like this? So I had a couple days where it just shot in my favor and I started to trail stops after we put in this candle here. Price wicked back, jumped. And I said, okay, let me take some risk off. So I took my risk, which was initially under the lows. I moved it first when it shot off. I moved it just below market structure here. Then price kept going and I moved my stop up to here. So I'm trailing a stop, following price. And at this point it moves again. So I say, okay, I need another higher low. I need something to hold and then we could trail stops. And we got it. Price held this area. Boom, I trailed stops again, right? So at this point, we took the initial risk here, trailed it tighter. Stop was here. Stops now moved behind market structure here. So I say, okay, if it pulls back, I'm out. Take my profit, call it a great move. At this point, it's a great move. At this point, I'm up like $10,000 plus on the account, which was a wonderful thing. Then I added to the trade on the next pullback. I can't remember if I added here or if I added at a later point. I'll have to check my other trade. I think I might have added here. So I add on this pullback and I say, okay, you know what? I like the trade. I want more of this size that I can get and I'll be playing with my profits, right? So I basically bought a bigger position after being up a good bit. So then markets keep going. They rallied again, and now I've got a full size, max size position on the S&P, okay? And price keeps going. Now, please note, I'm not just trying to brag about this position. I'm trying to break this down and how we were able to capture this, because next year, when I might not be in this trade anymore, it's time to find another one. But these trades come so infrequently where they just work this well that it's very rare for me to have moves like this. So when they do happen, I like to kind of evaluate why did this work so well? And I trailed stops again at this point. I continued to trail and trail and trail. And it was just to this point has not pulled back and broken support. So again, we trail stops behind here. So now we've got a trade from all the way over here, right? Entry here, stop is all the way up here. And I've got a full size position. I've bought more size to the trade. So then it keeps going. And this is pretty much where we are at today. My stop loss is still trailed here. And I'm just holding the trade. I can also break down losses as well. I think it's important to talk about losses as well. I'll do one really quick on my losses are really boring. They're like really quick and really uninteresting. Gold shot up on the open this week, and I bought it after what I thought was a good pullback. I thought this was a good discount. So again, same strategy, same general, looking for market structure, looking for pullbacks. The price comes down on gold, and I'm saying, okay, I like this area, 2050. I'll pick it up for my first attempt long here. Now, when I took that trade, it was on stream. I think it was yesterday or the day before. I took that trade on stream, and by the end of the stream, I was like stopped out. It just kept falling right away. So my losers are typically really boring and really quick. So I lost money on this trade. I went long here and price fell apart, did not hold the structure that I thought it would. So you let the market tell you it's time to get out. You've taken a trade and it didn't work out. And if you're early, you're wrong. So I'm still bullish on gold. And so maybe in a few days, if gold is up here, somebody might say, Nick, you should have just held your trade. No, I shouldn't have, because my structure, my plan was buy here and let the market tell you you're wrong if market structure breaks. So even if markets go up from here, my trade was wrong, because I do have to pay the price when you're trailing a stop, when you're keeping your stops tight. Guess what? Sometimes you pay for insurance and your stop gets hit and the market moves on without you. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.